Hi, Harry and David here. We thought with the US election that we'd actually comment a little bit about it. With the US election fastly approaching, we've noticed an uptick on articles that have been written, and lots of our clients have been phoning us and talking to us about the US election and actually giving us their opinions. And a lot of times it's not so much opinions or the more proclamations of, oh my God, if Trump gets in, the market's going to tank and drop because of these reasons, or if Biden gets in, the market's going to tank and drop because of these reasons. So we thought it'd be just a really nice time for us to give you our opinion on what we think is going to happen.
The reality is that it is not just who wins the White House that will shape policy, but also which party wins the congressional races for the House and Senate. There are three political scenarios that are most likely to occur. The first is that President Trump wins a second term and Congress remains split between a Democratic House and a Republican Senate. In this situation, a continuation of the status quo is most likely. In scenario two, the Democrats sweep the White House and Congress. This will likely bring re-regulation of some industries, higher taxes on corporations and high-income earners, and more fiscal stimulus than scenario one. In the third scenario, former Vice President Joe Biden wins the presidency, but the Republicans hold the Senate. Changes to taxation and fiscal spending are likely muted by a Republican Senate in this situation.
Great points, David. If we look at the overall general economy, no matter who is elected next year, the economy will still be recovering from the effects of COVID-19 and will not be at full capacity. So fiscal policy, federal taxes, and federal spending is likely to be the key driver of economic growth. If Biden does get in, he has proposed a combination of more federal spending and redistribution of tax burden from the middle-income taxpayers to the corporation and high-income individuals and investors. So that would definitely be a change between Trump and Biden. And the tone from the Democratic fiscal plan would also be more likely to try and address some inequalities and provide more spending and or tax breaks geared to lower and middle income households.
Yeah, on that point, from a tax plan, during the Trump administration, federal tax rates on corporate and individual income and capital gains came down dramatically. Trump has spoken of further cuts in a second term, but with a Democratic House, that would be difficult to achieve. A more likely scenario is a continuation of the current tax rates if Trump gets in. By contrast, Biden has proposed increasing the top tax rate for corporations to 28% from 21% where it's at currently, and for individuals to 39.6% from 37%, while treating capital gains and dividends now taxed at a top rate of 20% as ordinary income. Increases in corporate tax rates would be a hit to earnings, which are one driver of stock prices, though it's not the only one. Historically, rising corporate and individual tax rates have not meant falling stock prices. Interestingly, in the 13 previous instances of tax increases since 1950, the S&P 500, which is the stock index that tracks most of the major companies in the US, has shown higher average returns and higher odds of an advance in times when taxes are increasing.
Yeah, and if we look at stocks at sort of more specifically, for the overall stock market, there are definitely going to be pluses and minuses under all three election scenarios. With Biden, you'd likely have more fiscal stimulus, but higher taxes on corporation and high-income earners. That could include higher taxes on capital gains and disincentives for share buybacks, which has helped drive the stock market valuation higher in the US more so than other countries. With Trump, you would likely see lower taxes but less stimulus and more confrontational approach to US-China relations, which has unsettled markets in the past. The Trump administration ushered in a period of deregulation. One major winner was the oil and gas industry, which benefited from less stringent environmental regulations. With Biden, administration would likely go in the exact opposite direction, rolling many of those executive orders back and pushing for more clean energy. Other sectors that could come under heightened scrutiny in a Democratic administration includes healthcare, financial services, and big technology companies.
On the trade front, the differences between Biden and Trump may be more stylistic than substantive. Trump often takes a confrontational tone and uses social media extensively, whereas Biden is probably a much more conventional politician regarding trade and foreign policy and would be more likely to build multilateral coalitions to try and influence China. However, there is broad bipartisan consensus to get tough on China no matter who wins the White House. So any future policies are likely to continue to ramp up export controls, restrictions on investment, and other activities that deepen deglobalization pressures. Incentives to bring back key links in the industrial supply chain to the United States, or at least diversify out of China, are likely in either presidential outcome.
Irrespective of which candidate is voted in as president, it is interesting to note that investors' fortunes are not significantly better or worse off depending on if the Republicans or Democratic president is elected. Since 1960, the Dow Jones Industrial Average has posted a 12% average annual rate of return. There has been only a very slight outperformance during the Democratic president terms over the Republican president terms. One of the things that David and I are certain of is that there's going to be a lot of volatility around this election. There's so much uncertainty going on. We've got a pandemic. The media loves to jump in and make things bigger than life. We're probably not even going to know what the election results are for a couple of days, David.
Yeah, absolutely. Obviously, with the pandemic, they may have to go do this election a little bit differently this year than typical instantaneous results, so that may spike the volatility. But irrespective of which candidate wins the Oval Office, it's not something that we believe can be reliably traded, and we can make drastic changes on the portfolio for your benefit, depending on which candidate gets in. At the end of the day, both candidates have some similarities, some differences. And you can form your own opinion as to whether that's going to be good for the economy or not. But at the end of the day, neither of these candidates are going to drive future returns in the stock markets. At the end of the day, companies like Amazon or Microsoft or Walmart, all these companies dictate their own success in the future in terms of the products they can create, the innovation they have. That's going to dictate the future returns. And so even as Harry alluded to with that chart, really whoever's in office, it doesn't have a long-term impact on the returns of the market. So what we're going to continue to do, no matter who wins this election, is make sure that your portfolios are constructed based on what your goals are and continue to focus on high quality dividend paying companies in your portfolios.
Yeah, that's excellent, David. And I will reiterate one major point that David brought up there. It is up the US president or the Canadian prime minister, they do not make a company profitable. The companies themselves do. So if you're in Amazon or Walmart or even in the Royal Bank here, these companies are profitable because of the way they're run, not because of who's in the office. So again, that's an excellent point, David. And as always, if you have any questions, please don't hesitate to give David and I a call.
Thanks for tuning in, guys.
Take care.